Good afternoon, Whalecoin Talk community. I'm very excited today to have two guests on. We've got the CertiK team and we got GemPad. From the CertiK team, we have Chase, Kayvon, and one more person. Remind me again?
Will.
Chase, Kayvon, and Will from CertiK. We got Morty from GemPad. Morty, is there going to be anyone else from GemPad joining us today?
No, it's just myself.
Okay, fantastic. So the topic today, guys, is concerns in the industry and securing a brighter future. But before we get started, CertiK, GemPad, let's start with CertiK first. Boys, can you give us a quick background just for audience members that have not heard of you before of who you are and what kind of work you do in the industry?
Yeah, I'll start. So my name is Chase. I'm the social media marketing manager for CertiK. Kind of all over the place as far as what I do here, but mainly just, stuff on the marketing end. CertiK, for those who aren't aware, we are the leading, industry-leading Web3 security company. So we do have many products such as we do audits, KYC, have a Skynet, which is on-chain monitoring, bug bounty, and a ton of different stuff. I would just recommend to head to CertiK.com to learn a little bit more. And then we got Will and Kayvon here. So if you guys want to give a quick intro on yourself and what you do here.
Yeah, I'll start. Thanks, Chase. So I'm a research analyst here at CertiK, which certainly is a wide-ranging title, but gives me the opportunity to really keep up with what's going on at the ecosystem level, both developmentally and particularly as it relates to security and ongoing developments there. Pretty much my role is to sort of stay on top of projects that we showcase on our security leaderboard and also really kind of understand just the ins and outs of them kind of as they continue to develop and follow their roadmaps. There's a number of kind of categories of projects that we follow as research analysts, primarily being, kind of within DeFi and NFTs, but also, play to earn games like meme tokens, DEX's infrastructure, et cetera. So it's really nice to kind of be in the weeds of things here and additionally help out on our product side, where I've started to do a little bit of back-end work to really bolster a lot of upcoming developments that we are going to be deploying on CertiK.com.
Yep, and my name's Kayvon. I am the head of our research and KYC teams, so good to be back on here. I think we were here a couple weeks ago talking about our KYC. But yeah, looking forward to this.
And Morty, give us a quick intro.
Yes, so my name's Morty. I am in charge of marketing and a lot of stuff. To be honest, at GemPad, we have certain roles, but to be honest, everyone does a little bit of everything. GemPad is basically a launchpad. We like to call ourselves a community's launchpad. This is for a few different reasons. The main one being is that we try and give them, our community, as much say as possible. So whether it's having votes for stuff or even just taking on suggestions, we try and prioritize taking on their suggestions. We are only a few months old. So the launchpad itself was launched in end of January, start of February, and the coin was like maybe April, I think, if I remember right. So we're relatively new, but we've grown a lot since then. And we had 200,000 visitors last month, and we're only starting off. So we're pretty proud of it.
Right on. And gentlemen, again, as the title suggests, we want to talk about concerns in the industry and how to, again, secure a brighter future for all things crypto and Web3. So before we kind of get into the nuts and bolts of the Twitter space, what are some key issues that you all believe are currently plaguing the industry? Let's start with the CertiK team and then get to Morty, and then we'll go for it.
Yeah, I mean, on my end, I'm more of the social media and marketing side. I typically come across issues my key thing that's plaguing the industry, in general, is just scams, and that can go from a wide range of things. I classify projects with no roadmaps that are essentially just money grabs as part of that, and then obviously you have rug pulls and stuff like that you see kind of time after time. This can have a lot of different effects on the industry as a whole. Because typically when crypto makes news now, it's for a hack or a scam where you see that someone put their life savings into some project and now it's all gone and something terrible happened. So in general, the main issue I see is that, and that's one of the main problems with mass adoption, is how people perceive crypto in the space in general. And that's one of the toughest things that we're kind of fighting through as an industry, in my opinion.
And Chase, just to push back on that really quick, you mentioned roadmaps, and a lot of projects, it's really easy for them to spin up a roadmap and really put anything they want on there. What are some red flags when you see a project with a roadmap and there's like a phase 1 through 4 and there's tons of bullet points of all this stuff they're going to do? But what are some red flags to you when you see that, specifically with respect to those bullets of things that aren't necessarily indicative of real building?
Yeah, that's a good question. I mean, it could be things that, just seem a little extra and kind of out of the reach for a project just starting. If they're promising kind of basically everything. And I mean, an important thing to do is just kind of, so you got to think what's realistic for this new project. Like, are they promising me 100,000% APY if I stake their token, like just that kind of stuff. And then just kind of keep an eye on the progress that they're doing. Are they actually working towards those? Are they kind of avoiding and just doing all these little things to keep users happy without actually making any real progress in the sense? And, I mean, I think when I say money grabs, it's those projects that kind of promise the world, but then don't actually develop anything. And that's just something to keep an eye out for as a user. Like, is this like sustainable? Can they actually achieve this? What's the team look like? Who's behind it? All that kind of stuff is pretty important to look into.
And Kayvon, what are your thoughts? Anything to add to that?
Yeah, I think everything that Chase said, I agree with. The one thing I do want to talk about is like the future of anonymity, especially because I lead our KYC team, and identity is something that I've been thinking very deeply about. And I think anonymity in the crypto space has both been kind of a blessing and a curse, in the sense that it's enabled this ecosystem. I think a lot of crypto's ethos is kind of circled around anonymity, but the problem is like when you don't know who you're interacting with in a DAO, when you don't know who you're interacting with and putting all your life savings into, there is kind of like that fundamental broken trust. And I've been thinking a lot about how do we find ways to preserve kind of the core anonymity within crypto, but then also build like a layer of trust underneath that, right? So maybe that's, staying anonymous and working with anonymous teams, but then everyone within that team does like a private kind of background check, and you have some on-chain token or like soulbound token that's tied to your wallet address. And so that this person, even though they're anonymous, they're trustworthy or they're reputable, right? So I think there's a lot to be done in that realm. And I think a lot of what we see around
Did we lose him?
I think, I was going to say either IGC or Kayvon DC'd. But yeah, so while Kayvon gets back in here, Will, what about you? Anything to add to what Chase and Kayvon have said so far?
Yeah, I'd say kind of two things that we've really been seeing plaguing the industry, particularly as we've kind of seen this blow off top since November, are one, kind of going back to the money grab thing. Big institutions in the space, whether they are completely invested in financial markets as funds or, whether it is a lending platform like Celsius, they either, are not confident in the, treasury reserves that they have sort of backing them, which is especially dangerous when you have so many individuals kind of using your service and really reliant on it to, engage in, quote unquote DeFi, but, at least trying to, participate in the space and really understand how they can, take advantages there as opposed to having similar opportunities in the fiat world. Seeing a company like Three Arrows Capital go down with just an enormous leverage washout just kind of makes you think about what other sorts of risk management properties are happening across the ecosystem and who's really going to be a part of that contagion. I think it makes it difficult for anyone to really want to confidently participate in a system because they don't necessarily know what the potential second and third order effects could be in the event, things don't go the way that you plan. I'd say otherwise, kind of going a little bit more towards what we here at CertiK like to focus on is bridge risk. Think about the number of bridges that have been kind of exploited this past year, whether, Wormhole or Ronin, or even some of the ones that have happened since then. For example, even Harmony's bridge, and anyone who kind of held USDC on Harmony saw that really just get devalued immediately. It was a little bit, because, we all think the future is either going to be multi-chain or intra-chain or whatever your thesis is. There's multiple chains here to stay, and being able to navigate between them is going to be crucial for you engaging in the space in whatever capacity you see fit. And so, when you're limited to, staying on one chain or thinking that there's, a potential risk for jumping to another chain, it certainly limits a lot of the opportunity that you could have been optimistic about in the first place.
So, Will, what do you think? I know that each individual exploit had its own reasons for occurring, but what do you think needs to happen going forward with respect to bridge safety and security to not just kind of reassure value in those in the community that wanna experience a multi-chain industry, but so what do you think needs to happen? Actually, let's just leave it at that.
Yeah, let me disclose, I'm not an engineer, and so I'm not the best versed person to speak on this, but I know that there are sort of structural flaws between creating or having liquidity on one chain and then effectively burning it or locking it and then creating new liquidity on another chain. I think there are a number of ways actually that individuals have approached bridges, whether it's either via that sort of approach or literally transferring assets between chains. And there are certainly risks associated with both, but there are a number of individuals in the space kind of working towards building bridges for the future. So we're a bit more optimistic about those and definitely interested in conducting their audits.
And Morty, I want to hear from you as well. So what are some key issues that you think are currently plaguing the industry? What have you seen in your time here and in your time building GemPad?
There's a good few things, to be honest. One of the biggest things we find is the kind of fake influencers almost. The kind of botted call channels and stuff like that. And they're just, and especially, it's not even the botted ones, it's not even the fake ones. It's a lot of call channels and certain other groups and all. They're kind of charging bull prices still. And it takes a lot of money out of projects, and it makes it a lot harder to launch a successful project, especially now when there's so few buyers. And then that kind of, speaking of being botted, like bots in general, whether it's botting followers or even like in when you have VCs at launch, sometimes you see loads of bots in it and it's obvious. Like nowadays, most people can kind of tell, they know what to look for. Another big thing we have, and I think one of the guys mentioned it there to start, is people tend to do the same project over and over again. Now, I know that's a bit rich coming from a guy who's running a launchpad, but we do find when we're launching projects that there's very few differences between them. So it's like, even Launchpad is a great example, because we get one nearly every week coming to us saying they want to make their own Launchpad. And it's kind of like because they've seen other people do it and maybe they think it's easier, maybe they think it's a good way of getting money quick, and they just don't realize how much work goes into it. And once they do, they just kind of give up on it. Because there's a lot, like as I said, we're only a few months old and we probably 10, 16 hours a day. And to be honest, it feels like we haven't even scratched the surface on what we want to do. So whenever we get someone who wants to do a Launchpad, we're always warning them, look, take it from us. There's so much work. But there's loads of ones like that play to earn games, and it just kind of saturates the market and it makes the good projects harder to launch. I think the main issue to solve is definitely kind of the likes of some certain call channels and stuff like that, and marketing in general. And another big thing, and actually it's probably the worst thing, is greed. There's just a lot of greedy people out there behind certain projects and stuff like that almost suck all the money out, and it just doesn't work out well for anyone, bar I guess them. So that's kind of at GemPad what we're trying to do. We're trying to be the complete opposite of that. We're trying, like, whether it's kind of looking after the agents that come to us, we try and pay them competitively, even when we do with launches. So like we only charge, it's 1 BNB for listing and it's 2% of the raise. And we just try and keep the prices fair, because look, once we kind of get bigger, we're still going to bring in a load of money that way and still providing value for the owners of our coin, but not at the expense of projects.
So Morty, a couple notes on that. I completely agree with you. The number of copy-paste projects that have plagued the space over the last year and a half have been at an egregious rate. And I do think that it starts to disincentivize a lot of oftentimes a good project might come your way, but you're so used to seeing the same derivative of something you've been rugged on or something that went to zero that you just don't want to participate. You might miss out on a good opportunity. But I want to talk a bit more about what GemPad is doing, because you guys aren't just another launchpad. We've discussed this before. You're doing a number of things differently than the hundreds of launchpads that currently exist in the industry. So can you elaborate a bit more on what makes GemPad so unique? And as you've mentioned a couple points already, could you expand upon what GemPad is doing to mitigate the number of bad actors coming onto your platform?
Yeah, so when it comes to kind of projects to try and what we're kind of doing differently, one of the main things we do is tiers. Basically, we sort a project into a tier. when it comes to launch with us. This gives the investor, even at a glance, they can see the kind of quality and safety of the project. Now, they're not set in stone in the sense that do not just go buy them and just say, like, some people want to buy every diamond. We tell you not to do that, because look, at the end of the day, we're all investors ourselves and we have to make a decision. It might not be the right decision. And look, we have got around once or twice, but we learn from that, and that's the most important thing. So when a project comes to us, if they want to list on common and gold, there's no requirements. The only difference is on gold, you have to have a KYC or an audit. You're allowed both, but you must have one. When it comes to platinum, diamond, or alpha, which is our newest and highest tier, there's certain requirements they have to meet. Now, these, again, are not final, as in the sense that we change them the whole time. Like I said, that when we mess up and we kind of put a project higher than it should be, we literally will go, why was that so bad? And what kind of requirements can we add to stop getting that again? And from that, it has gotten a lot better. Like, there's some kind of projects at the start that would not be the same tier if they came to us today. And like when it comes to, say, platinum, or when it comes to all of them, say sometimes what's stopping someone from being diamond is they just want to raise too much. And that's actually one of the biggest things we have as well. And I actually should have said it, is when a project comes to launch with us, they want to fill their hard cap and then worry about everything else afterwards. And we always try and say to them, look, you might be able to fill 500 BNB, 1,000 BNB. You might be able to do that. But then there goes all your buy pressure. And we always say that you should end up or aim to get as small as a hard cap as you can that leaves you enough money, whether it's for development or marketing, whatever you needed it for. And try and get as small as you can. And then you'll earn just as much from the transactions, especially if there's a tax on it. Some people listen to us, some don't. But when it comes to kind of going for, say, a diamond tier, if a project, say, wanted 1,000 BNB, but it's a brilliant project, we might go and say to them, look, you're going to be platinum, but if you go to 500 BNB hard cap, you can be diamond. And more often than not, they will drop down. We have some stubborn people who won't. Some people have actually went to elsewhere because we wouldn't give them a higher tier. Some people have blamed us. That's the reason they haven't filled, is because of the higher tier. But we always say that, like, people get the wrong idea with the tiers. They think they need the tier to fill. And they're like, oh, because we've literally had people come to us and say, I want diamond because it will be great marketing and it'll help me fill. And it's like, a diamond project doesn't need diamond to fill. It's just a bonus on top. And again, some people get it and some people don't. But that's just one of the ways we try and do it differently. Another thing that we do, now again, common and gold, they're not vetted whatsoever, but for the higher tiers, not only do they have to reach requirements, but we do have groups with all of them. So we'll talk to them and kind of suss them out, basically. So whether it's, say, if they're saying some dodgy things, or even the KYC is a bit different. So after a KYC, the guy who does it, Rainlands, it used to be myself, but then I just got too busy and he had to take over. Again, he's a really vital part of our team, so it's not like it's a random person, but he's after taking over. And if someone is, say, dodgy, for want of a better word, and he kind of gets a weird vibe off him, he'll come and tell us. And we will then kind of investigate it, search for any other red flags, and kind of go from there. Another big thing is our community is great at spotting them, particularly our alpha group. So I know some of the lads from Wellcoin Talk are in there. So basically with our alpha group, it's just all our diamond holders. And once you hold for 7 days, you can get in. There's some influencers in there as well. And basically we give them the kind of best of the best projects. But the kind of thing to go against them is that they can't dump at all. We actually monitor their wallets, and if they do dump, they get kicked and they won't be ever invited back in. And to be fair, nearly all the ones that we've had, like, there's always 1 or 2 that will dump, but nearly all of them have been great and have held the floor. But they actually, not only do they buy into projects and hold the floor rate for us, which makes it easier to get other projects, but they also, when they actually alert us to some scams. So sometimes we have like a project on it. There was one recently we cancelled. It was a fair launch and it raised 400 or 500 BNB. It was like learn to earn, maybe. No, that could be completely the wrong one, so don't quote me on that, but it was something along those lines. And they were the ones that kind of alerted us to us. They said that they noticed, I think it was a commentator. So because we actually, when a comment or gold list, even though we don't vet it, we will kind of go and search into it, especially if we get notified about it. So with that, the contract had a few problems with it, I believe was the main issue. And we tried contacting the team just because it could be an accident. It's happened before where actually someone forked the contract that had a thing in the contract that would have been a rug. And we ended up fixing that. They didn't mean it at all. So we tried to contact the team. They ignored us and they ignored us. So we cancelled it. The minute we cancelled it, they messaged us saying, "Why did you cancel?" But yeah, that's just some ways that we're trying to improve the space. Just there's plenty of others, and we are trying to improve day by day. But they're the main bits anyway.
Wow, yeah, certainly. So lots of unique features with respect to GemPad. Morty, obviously, you guys are doing a lot on that and to distinguish yourselves. I wanted to focus, gentlemen, on audits and KYCs because those seems to be two things that the majority of projects lead on to say, hey, you can trust us, you can give us your money, nothing's bad's going to happen, right? We've done an audit with so-and-so audit company, we've done a KYC with so-and-so company. So I want to start with the CertiK team. Why do you believe so many projects continue to get rugged or exploited despite stringent audits and KYC standards?
Yeah, I mean, I'll let Will or Kayvon kind of dive into the KYC thing. But as far as audits, I think I don't know if I said this last time we were on here, but a lot of projects will just get an audit just to say they did and kind of appease the community in a sense. So, I mean, at CertiK, one thing we do is everything's publicly available. We're very transparent, and we show what we find in the audits, and then we highlight which problems the project fixed and which ones they didn't. And that's a very important thing to keep an eye on. Just don't take a project's word for it and they say they got audited, that it's safe. Kind of go through, read the audit report if you can, even a high level, just glance at it and see what they figured out. We make it very easy on the website to kind of highlight what was found, whether it was fixed or not. We make that very clear for users to so they don't have to have the technical knowledge to kind of go through and read the whole audit report. But that's one thing just on the audit side is just make sure that they actually care about the results of the audit and they don't just do it to appease the community and everyone just automatically thinks it's safe. As far as the KYC thing, I mean, I'm no expert, so I brought on these guys, but from what I can tell, there's a lot of iffy KYCs out there, and I don't know if everyone's aware, but there are people you can literally hire to pass KYC for your project, and then they'll have fake IDs, all this different stuff. So a lot of projects will get a KYC, and it wasn't even them doing it. It wasn't the project owners. It's just some random guy they hired on Craigslist or what be it. So that's one thing to keep an eye out for. Kayvon can talk more about that.
Yeah, the way I like to think about it is audits are for hacks and KYC is for rugs. So, when I say audits are for hacks, an audit is like very focused on a security review. And during the audit process, we will call out like centralization risk within the report. So we'll let users know like, hey, FYI, this project in this contract, they have access to be able to like mint more tokens or to be able to, pull money from the liquidity pool or whatever, right? But like at the end of the day, the focus of the audit is more on the security side. So just because a project gets audited doesn't mean that they can't rug. But that's where our KYC product comes in, and that's what we've kind of spent a lot of time building out on the KYC side. So CertiK, to give you some numbers, to date, we've done over 200 KYCs. Only 88 projects have passed through the KYCs. And of those 88 projects, only one has been a rug pull. And that one that is a rug pull, we're actively working with on a federal investigation. We have all their identity, and we're pursuing them to the full extent of the law, right? So I think as Chase said, KYC, it's, gets like a bad rep in the industry, but specifically KYCs for project teams, they have to be like a full-fledged due diligence into the project. Like there are so many KYC providers out there that just have like, all right, submit your ID into the system, and then we'll just give you a certificate. There you go. This project is KYC'd. But then on the back end, they're using a fake ID, or they just hired someone for like $30 to come do that KYC and pretend they're the project founder, right? So there's so many loopholes in the system.
Damn it happened again.
Oh,
he's back.
He's back.
Did I drop off? Yeah, sorry about that. Technical difficulty.
Kayvon, it might help if you could kind of speak to how, at the method level, we kind of work against a lot of these different tactics that, some sketchy teams try to employ when it comes to, surmounting a KYC, if we've seen any of that so far.
Yeah, that's I think that's a great idea. So a lot of what we've seen are people using pawns to come to KYC for them. So what I mean is like the project founder themselves won't KYC, but they'll send like a community manager that they hired off Fiverr to come do the KYC, or they'll hire like a paid actor and pay them, some amount of money to come do the KYC on their behalf. And the way that we catch these folks is that we've designed kind of our system and tested our system over and over again to make sure that we can catch all of these edge cases, right? So what we do is everyone that goes through our KYC process, we have like a 30-minute interview with the founder with a professional background investigator from the FBI that's on our team, right? So this is like very much designed to understand, is this person legit? Are they actually part of the team? Have they actually, done their, are they actually acting in good faith? Or does it seem like they have any like real intentions for this project? Or is it kind of, can we get some intention that this is like a scam or a rug pull? We work with like an AI-based ID verification system known as SumSub. So there are ID partners. And so every time someone submits an ID, what we do is we run that ID through a number of different systems and we validate the legitimacy of that ID, make sure that there's no red flags, no sort of criminal background, kind of all of that. And in addition to that, we do like open source research. So we hop into the project's Telegram, make sure that the founder who claims to be KYCing is actually part of the project team. We look at the project's wallet to make sure that they haven't rugged. So it's a very extensive process and like a lot of different things that we've put in place to make sure that a project isn't able to, like kind of fake through the KYC project process, whereas I think a lot of other KYC providers are just kind of vulnerable, to be honest.
Right on. And Morty, can you tell us specifically about how your KYC and audit process work? Do you work with third parties? Do you do them internally? Give us some more insight, please.
Yeah, so we do KYC ourselves. Now, we do accept third parties for some, and not all third parties, because like the guys were saying, we don't really like the KYCs that, there's some, I think, that you record a video and it's all done electronically. There's no human interaction. We don't like those. But we do accept some KYCs for gold and platinum. But diamond and especially alpha have to be done through us, or Obsidian is another one that we do. And I'd actually like to talk to CertiK about probably supporting those for the higher tiers as well, because by the sound of it, they're doing great with the KYC. But our KYC is done how we do it. I'll very quickly go through this. We have a separate Telegram account just for KYC. As I said, Raynon did it, and before he did it, it was myself. So we have them send a selfie with their ID in it, then an ID back in front. We go on to a Zoom call where they say their full name of the project, role in the project, and they show their ID again, just so it's a live video and, it can't be like a Photoshopped ID or anything like that. We also have them show us that they have access to the Deployer wallet. And now that's not a necessity, but it can be needed, say if, it's not always needed if, say, it's a developer they hired that's doing the development and they don't have access. So there's some well-known kind of developers that just don't give out the keys to the dev wallet. And we don't expect them to KYC for the project that they're just creating the contract for and kind of looking after that. So on the kind of rare occasion, that's when we don't get the developer wallet. We also have them send a message to us on Telegram live on the call, just so they can show it's their account. And often we kind of, because like I said, when we're doing the kind of vetting process, or even being in the group with them, we'll see who's talking the most. And if the guy doing the KYC says he's the team leader but hasn't spoken a word to us, we then are going to investigate that, and there's a chance that we will just not let the project launch. We actually had a funny story about KYCs where we had a guy come on and do a KYC for us, and the project didn't launch. I think they launched somewhere else. We were a bit suspicious of him, just the way he was kind of talking about it. We thought he might be a paid KYC, but we weren't 100% sure. And we kind of forgot about it because we just had so much going on. And then this other project came, totally unrelated, totally different account, came to KYC. And when he sent the selfie, I was like, this is the same guy, just for a totally different project and has to be paid. So we just said, you can't launch with us. This is, like he was saying he's part of the team. And we were like, we have no proof that you're not, but you're not launching with us because we don't want to take that risk. And we're pretty proud to say that we've had well over 100 projects. And I think we've had 1 or 2 or 3 proper rugs. So we're kind of proud of that, but that still means there's room for improvement. Now, I'd be delighted if we could get to the stage where no one could rug in crypto. Hopefully we can get to that day someday. But in the meantime, we're always trying to improve. So we are going to announce 2 new badges, or we already announced one of them. One of them's vetted. So we created a badge called Seifu, and people kind of got confused with it. It was supposed to be another separate badge for when there was a Seifu dev. So a dev that had done multiple contracts, and not only did we trust them, but kind of the general public trusted them, because they know that it wouldn't even be worth their while rugging, that they make more money just developing the projects, or the code for the contracts rather. But it caused a lot of confusion because people thought it meant a Seifu team, and they were kind of expecting that once they saw the badge there would be X's. So we got rid of it. And that was again actually down to our alphas. So when we were in the alpha group chat, they were just saying they don't like it and they want rid of it. And like I said, we're the community's launchpad, so usually what they say goes. So we replaced it with a vetted badge. So the vetted badge kind of looks into, there's different groups. So we don't do the vetting. And as well, when we're speaking about audits, we don't do audits either. It's all third party. Now, Red often will check the code himself. Red is our lead developer. So he'll often check the code himself and have a look and see if there are any red flags. So I think that's a big thing as well. But yeah, going on to the vetted badge, basically, there's different groups that do it. And once they get the vetted badge and we put it on, when you click on the vetted badge, it will bring you to, say, if it's a PDF that they've done of all their findings. So it could be that they've checked the deployer wallets, if it's been linked with any scams, kind of holders, if there's already holders of the coin when there's a pre-sale there, just general stuff like that. And different ones have different ways of doing it because, as I said, it's done by a third party. We have DeFi Skeptics is one of the guys doing it. But we are kind of reaching out to other partners to see if they're interested because we kind of feel that the people, say the AMA groups and stuff like that, would be best to kind of give their opinion when it comes to the vetted badge. But we've actually had some people that say they don't like it, they don't want to be part of it because it comes back on them and it provides a lot more pressure. But yeah, we're just trying to make it safer, and it comes from kind of looking through code when it comes to like Red doing that, and it's also just talking to the team, and that's one of the biggest things we found, and probably how we avoided so much rugs. It's simply when we talk to the team, we actually kind of get the vibe from them. You know, when you can kind of tell that it's going dodgy, something dodgy is going on here. And one of the things as well, the biggest things we found is that when someone tries to rush us, they're nearly always scammers. That if they're trying to rush us, we just want to get rid of them because it's too much of a red flag for us.
So, Morty, obviously we don't have Red on the call, and the answer to this question is probably going to be longer from CertiK, but I wanted to ask you first, if you do know, or if you do chat with Red about this, what are some of the biggest issues you see with contracts?
Overcomplication. I know, I like you said, I can't go into too much detail, but I know we've had some in the past where, and I can think of one in particular now, I can't tell you the name, I actually just can't even think of it. It was really high project, was going to be really good. Being truthful, the entire GemPad team actually invested in it, and we were really excited for it. And in the end, the contract was too complicated, and it costed too much gas, and it just people couldn't sell, and people couldn't buy, and it just totally ruined it. And that was really the biggest thing for us. Yeah, that's really it. That's really all I can say off the top of my head.
Sure. Will, Kayvon, Chase, CertiK team, give us your thoughts on that.
Yeah, I think I guess going back to kind of what Morty was saying initially about how GemPad does the KYC, it's like great to hear. I think everything seems legit in the process. I do have a question for you, Morty. One thing or I guess two questions. One thing that we noticed in our KYC process is a lot of times we'll KYC the founders and like founding team. Everyone is legit. But we found like a core part of the process is actually verifying like the contract dev itself, because what we see is like a lot of times a lot of non-technical folks will come together, build a project, but then their developer is actually, some guy from Fiverr that they have no idea who this person is, and then they deploy the code, and then the developer ultimately ends up rugging. So what role does the developer, I guess, have in your process? And then follow up to that, if a project does rug, like what do you guys do in terms of like holding them accountable?
So to the first question, we often, because we need the deployer in the KYC, as I said, unless it's a known dev, so usually it is the dev KYCing more often than not. Now, I can't speak recently, obviously, because I don't do the KYCs anymore. But I know back when I was doing it, I found that when we were kind of talking to them and they were deciding, say there's like 2 or 3 in the team, and they were trying to pick, because they were all like co-owners or whatever, and they were trying to pick, usually it would be the dev, because we'd say we need a deployer and they would do it. What was the second question? Sorry, go again for it.
Yeah, thanks. The second question was like, if a project does KYC and they ultimately end up rugging, like what do you guys do? What are the consequences?
Okay, yeah. So when we first started GemPad, one of the things that we noticed was some places, when a rug happens, they kind of release the KYC, and that was it. And it was kind of like giving it back to the community, saying, there you go, do what you want. And then we found a lot of times nothing happens because more often than not, like just an investor isn't equipped to kind of go hunt someone down. So what we do at the moment is we actually go to their local police, not obviously not physically, and we try and get in contact with them to provide the details, and then even get in contact with Interpol and stuff like that. Now we found ourselves, because our team isn't huge, and as I said, we're relatively new. We found that we want to improve on this, on what happens with a rug. So one of the ways we're doing it is, I actually can't say. So there's something coming soon of a better way of catching or going after people who rug, but I can't say right now.
Sure, yeah, that's understandable. I think one thing that we wanted to do, and the reason why I asked this question is because I think it's an important part of the KYC process, right? Like a community can only trust the KYC if there are consequences for the KYC. If not, then it's like, okay, KYC just doesn't really mean much. But what we've done in-house is we built out a pretty extensive team of like folks from law enforcement. So we have people from the FBI, British intelligence, French police, kind of covering all global agencies. And we've also built out a really good relationship with a lot of these different agencies so that we can go to them directly rather than having to submit kind of some sort of generic report and like file the investigations. And because we have folks that have worked in these agencies before, like we know kind of the ins and outs of what it takes to actually pursue a crime versus just handing over some sort of information. So anyway, we can talk offline, but if you guys are ever interested in kind of getting some help there, we would love to work with as many folks as we can on that side.
Yeah, well, that would actually be great. Something similar to that is what we have planned, but yeah, I'd love to talk to you as well. Because like I kind of said, and like you're saying, that if nothing's going to happen if someone rogues when they KYC, then what's the point? Because we kind of talked as well, is even having that, even KYC itself is more of a deterrent, that we find that because even our KYC process itself, never mind about what happens afterwards, we found that there were some people that just didn't want to do it, and we can only guess why they didn't want to do it. So like you're saying, when you have almost the threat of what will happen if they rogue behind you, it becomes that much more of a deterrent, and then stops the scam in the first place, which is better than the best outcome, really. And because that's, no one wants to scam, no matter what happens afterwards, no matter how much you get the money back, you'd rather just not have to scam, full stop. But you need to have that threat almost, as I said, to be able to go after them properly. Yeah, so I'd definitely love to speak to you privately.
Question for the CertiK team. If a launchpad such as GemPad wanted to integrate your KYC services, obviously you guys really do it differently than everyone else in the space. If they wanted to go ahead and work with you and integrate those services, how would they go about doing so, and what would be the cost?
Yes, so we actually do work with a number of launchpads already, where like if a project wants to get listed on the launchpad, they go through our process real quick. So typically, we're pretty flexible in terms of like how we can structure those. I think usually the projects themselves can come to us directly and kind of like pay for that certification, and then it also works across not just that launchpad, but we have like all the big exchanges are our partners, so they accept our KYC certifications and whatnot. So that's something we can always kind of flesh out on a case-by-case basis and just structure something that works with the launchpads themselves.
Yeah, I mean, we're here to kind of make the space safer in general. So wherever we can lend that hand and kind of get more projects on board, we're always happy to do so. I mean, as our mission statement says, we're working to secure the Web3 world, and these bad actors and scams and rug pulls are playing a huge factor in that. So wherever we can kind of lend a hand and help with the KYC process, we're always happy to.
So I want to start with the CertiK team on this one, and then obviously get Morty's input as well. What do you guys consider to be some flaws, or the flaws in the majority of tokenomic structures that we see today?
Yeah, that's a good question, and I can take that. Sort of to start, just having seen a lot of projects come through onboarding with all kinds of different tokenomic structures. Regarding flaws, I'd say that we could probably boil it down to 4 or 5 kind of major things that we see as somewhat red flags to varying degrees. Kind of the first one and most obvious right off the bat is that the demand for the token is a function of sustainable utility from spending, which is uncorrelated with market demand. For example, think about token demand streams that are not ideal, right? For example, high yields on staking to temporarily absorb maybe some excess supply of the token, or even just relying on a continuous and unsustainable inflow of new users who are really just speculating on the asset to pump demand, will really not have kind of long-term positive implications for your protocol, or at least the tokenization of it. Next, I think you really want to make sure that like holders actually benefit from growth of the project, and that they're incentivized to hold the token in the long run, because you certainly don't want to see everyone dump it, or for kind of the incentives around holding there to evaporate over time. I mean, think about kind of the purpose of holding a token, right? It either will sort of provide you some sort of revenue stream, kind of like an equity or debt in a sense, traditional sense. It will sort of be a guarantee of price increase from the team's commitment to token buyback with project profits, which really helps to stabilize the price over time. Or there's a sort of a guarantee of allocation of like bought back supply to holders, who are rewarded for having locked up their funds within this volatile asset. And that will sort of occur like when the project growth is strong, or demand for spending of the project utility token is strong. Now also there should just with a lot of these volatile tokens kind of be some mechanism in place to stabilize token price. That's sort of a big thing that we look at with onboarding here, right? For example, the allocation of profits from the team should in some part maybe go towards deepening liquidity in an LP of the token, or there should be some sort of allocation of token supply during times of really excess movement upwards in price, so that holders aren't diluted, and so that supply is really kind of net increased, offsetting like a big demand shock. Ultimately, I think another thing that we kind of all think about on the supply side is the emission schedule, right? It seems that most projects kind of set some emission schedule in place that really ultimately works against them in the long run. If there's some rigid emission schedule or capped final supply that you have to think about, you're really unnecessarily setting supply constraints on your token, and then you have to think about how you're going to kind of move demand as a result, and that's going to perhaps lead you as a leader of the project, or whoever's responsible there, to think about some demand streams that might not necessarily be so savory to match that. I think the most ideal kind of supply models we've seen kind of follow a sort of like open market operations approach, where they can kind of respond to hyper project growth, or lack thereof, by increasing and decreasing token supply, and then using those increases and decreases strategically to benefit holders of the project. At the end of the day, though, the tokenomics model should really just be simple, like with a clear use case. Like you think about demand in general, and it kind of comes down to three buckets, right? Like value, and like I guess yield, we could think about it. Then utility. And then after utility, there's kind of the whole speculation and memes side of things, right? Like with the value and yield token, you can get into staking and rewards. You're rewarded for holding the token. You'll get some APR if you're, staking in some kind of staking mechanism. And ultimately, token rewards should go towards holders for holding that token in order to increase demand. On the utility side of things, obviously we all understand gas fees and how a token can be used within a protocol. That kind of presents a really clear use case, and that's something that we strive to see when evaluating things. Now, kind of the question comes up about how often might we encounter protocols that really don't need a token but launch one anyways because it's crypto. And I think there's a couple ways to look at this argument. Certainly, it might not seem as if you might not how do you say this? You might not necessarily need a token in all cases, but at the end of the day, particularly with speculation and really meme tokens, you want to see sort of a strong love for the project, right? Like what's going on in the Discord, what's the sentiment like on Twitter, and is there excitement, loyalty, and hype? This space is supposed to be fun. There's not really kind of any guidelines around what necessarily needs to happen. Yes, we're all trying to achieve financial freedom, and that can happen through a number of different avenues. And some of the strongest communities we've seen in crypto have come behind tokens that are absolutely nonsensical or unnecessary from, perhaps a traditional perspective, but that at the end of the day really anchor a community together and have them kind of stay put through ups and downs in the market. And there's some commendable models out there. But I'd say the biggest red flag is when you're looking at a project white paper, for example, and they just say what the initial allocation is like. And, regardless of what that looks like, however, sketchy or not, we deem it to be based on, whether or not it's a fair launch or someone is getting some privileged access either at a specified time or at a specified price. That's probably the scariest thing, because you don't really know what's going to influence demand going forward. Supply might not necessarily even stick to that kind of emission schedule. We've certainly seen a number of projects kind of go against what they have in their roadmaps, and so it's important to kind of also keep in mind how these things might evolve over time, just given demand for the project in general, what growth looks like, what's going on in the market. What does the project really need? And, are these things all kind of decided upon in a decentralized nature, right? Like tokenomics ultimately can spill into governance. And there are some really great examples out there of how project teams have kind of kept that in mind through all the turbulence that we see in this industry.
And fantastic answer, Chase. So much to unpack there. I want to pass the mic to Morty, though, and hear Morty's thoughts. Morty, care to elaborate or add your own 2 cents to that?
Will you just repeat the question just because it was a...
Of course. So, Morty, what do you consider to be flaws in the majority of tokenomic structures that we see today? And I'm sure you guys see so many being the launchpad.
Like we were saying earlier, I can't say too much about it just because obviously Red being the lead dev is probably the best one to answer that. I can't really say too much more than I already said. I do think the biggest problems we see, and maybe it's not even so much tokenomics, and I kind of said it earlier, it's just people wanting to raise too much, or even the token. Actually, I'll tell you, just had an idea, not an idea, but a thought. Biggest problems we see, and maybe it's not so much of tokenomics, but it's the vesting that people want, the vesting that people are trying to give out, where it's like 5% of TGE and 10% and 7%, and it's just, not only are people not going to buy it, but anyone who does will just lose money more than likely, especially in this market, unless the project is an absolute home run, which is very, very, very hard to come by in this market. Now, I know that's probably not the exact question, the exact answer to the question you asked, but it is a really big problem that we find, and it's probably the best answer I can give, considering Red's on here. But yeah, vesting, and I always found that vesting, the best thing with it is the ideal vesting, if there has to be vesting, and we're against vesting. We didn't even want to add it to the launchpad until the community demanded it, and then we had to add it. Or not the community, rather, just projects wanted it added. But I find that if you can kind of get enough to sell your initials at launch, then people are happy with the vesting. Any less than that is just not enough. Sorry if it's not exactly the right answer, but it's the best one I can give.
No, that was great. And to be fair, Chase really went in and was able to cover everything from a nuts and bolts perspective. I want to start with you, Morty, on the next one. We've identified a number of different key issues that are currently plaguing the space. So I'm curious to know, what are some things you believe need to happen with respect to what we've discussed and also with respect to other things in order to push the market towards another period of hypergrowth and drive mainstream adoption?
I think some people on top need to change, and they're just kind of, like I kind of spoke about greed earlier, there's still a lot of greedy people in powerful positions. Now, I don't want to name any names or anything like that, but I do think that's one thing that kind of has to change. And another thing that has to change is, I do find that people in crypto they're not that open to change. So, even as a launchpad, when we came along, we found that other people or projects were just choosing other launchpads, and their literal reason was, I launched a few months ago and it was grand. I had no issues, so I'm just going to go there again. And we kind of were like, okay, but we're offering you more for less. And they're like, yeah, but I did it fine last time, so I don't want to change anything, even though the change could be better. Now, I know that's not the greatest example because I'm probably biased saying that my launchpad is the best and all, yada, yada, yada. But the point still holds true that people are kind of afraid to change. And even if the launchpad would have been equal, they're basing off the project that they launched in the bubble. And of course it was fine there because nearly every project that was launched in the bull did fairly well at the start. But not anymore. And now I think we kind of have to be a bit more selective. We have to be a bit more open to change when it's better. We shouldn't just go to what we're used to. And I do think that crypto also has a short memory. So I find that people are a part of scams. Now, maybe not the actual scammer, but maybe had a hand in it or just dodgy stuff in general. And we're very quick to forget about it and move on. And I think that kind of has to change or we're just going to go around in circles.
Hey, Noah, two things. One, I would love to take credit for Will's explanation on problems in tokenomic structures, but I cannot.
Oh my God. I'm so sorry, Will.
I would love
Honestly,
to take
no
credit for
worries.
that.
yeah, I got the voices mixed up, man.
got
Matter of
the
fact,
facts out there.
Will, excellent explanation, man. I honestly haven't heard anyone break it down the way you did. So hats off to you. Kudos to that. That was awesome.
But then another thing, I think Kayvon and Will got a jump at the hour, which is now, but I'm happy to keep on going.
Fantastic. Kayvon, Will, thank you so much for being with us. I really appreciate both your time and always welcome to come back in the future.
Definitely.
Thanks, Noah.
Thank you, Noah. And Morty, nice to meet you.
Nice to meet you too, lads.
Yeah, great to meet you, Morty.
Have a good one, guys.
Cheers.
You too. See you later.
All right.
So
what do you
yeah,
got
Chase,
next?
just adding to that previous question, what are some key things you think need to happen in order for the industry to go through its next period of hyper growth and also drive mainstream adoption?
Yeah, that's a good question. I mean, I've talked about this before in a previous space. I'm not sure who it was with, but one thing for adoption is, I think it was a GameFi project I was talking to, and it's like one thing for GameFi projects is the ease of use and how easy is it for someone who just plays games on PlayStation or whatever, be it, how easy is it for that person who has no crypto knowledge to kind of get onto your platform and start playing games in the Web3 world, if you want to call it that. And, like I was talking to them about like some games you have to have an NFT to play, and that means you have to go make a wallet, go to an exchange, buy the NFT, that's a whole process. So I think making the process as simple as we can and, not make people have to have all these different types of wallets and all that stuff will really drive adoption for the most part. And then just, preaching the use cases of why this is beneficial, why people should be paying attention, because often, people have their own opinions of crypto, magic internet money, whatever you want to call it. And I think we as users and builders in this space have to make that known of like, these are the benefits for it. This is why you should care. And this is how easy it is to do it. I think those are the three main points that need to be addressed and driven to kind of get, new users on and kind of drive that adoption.
Love it. Gentlemen, I had a couple more questions, a couple more topics I wanted to talk about. There were stablecoins and CBDCs. However, we are at the top of the hour, and I want to be cognizant of your time. I'm not sure if you can stay a bit longer or if you would like us to kind of take these topics and discuss them another time.
Yeah, for me, if we can do it another time would be great.
Okay, fantastic. Well,
Sorry.
no worries, Morty, Chase, and the CertiK team, everyone else that was on here. I really appreciate you guys coming on. I thought that was a great discussion. I would love to do more of these sorts of fireside chats where we discuss more generic topics in the industry. I think you guys have a lot of experience in the space and obviously bring a lot of great ideas and a lot of great insights to our community as well as your own community. So thank you so much for being with us. Like I said, again, I really appreciate both your times.
Yeah, for sure. I think kind of stopping it here and saving this for another time sets up a good segue because we did get through, a lot of the stuff that's plaguing the industry and how we kind of work around it. And then I think the next thing is be more kind of different topics. So yeah, I do think it's a good place to stop. And as always, I appreciate your time, Noah, setting all this up and stuff. And Morty, it was great meeting you guys. I'm excited to learn more about you guys. And hopefully we can chat online, see where we can kind of connect and where we can help each other out and that stuff.
Yeah, first of all, thanks for having me on, Noah, and all the people listening, thanks for tuning in, and lovely to meet you, Chase. You sound like you want what's best for the space, so I think we'll get along great. But yeah, thanks for having me on.
Thank you again, gentlemen. Whale Coin Talk community, thank you so much for being with us today. Everyone, always remember that everything you hear on our podium is for educational and informational purposes only. We never give financial advice. Always do your own research and invest only what you're willing to lose. My name is Noah from Whale Coin Talk, signing out. Everyone, take care.